Welcome to Drill Down Earnings. We've got a quick look at NVIDIA results, biggest company in the markets, company near and dear to our hearts. I'm Cory Johnson, Chief Market Strategist from Epistrophy Capital Research. Look at the 50 most important companies in technology. NVIDIA's probably top 5. I think ASML may be more important, but I don't know. NVIDIA's what everyone's been waiting for here. Q3 earnings better than Wall Street expected. Wall Street wanted $55 billion in revenue. It got $2 billion more, 57. $1.30 in earnings instead of $1.26. But when we look beyond those numbers, we see really strong quarter and really strong guidance from NVIDIA, and that's the whole shooting match here. 62% revenue growth on a year-over-year basis. Some of the biggest revenues any company's ever reported in a quarter, and it's growing at 62% year-over-year. I mean, 2 years ago, these were jaw-dropping numbers, and well, let's look at that incredible growth. It's just fantastic here, $57 billion in the quarter, as I say. Data center was most of that. Data center is $51.2 billion. And that helped them because those data center build-outs are happening so quickly. They're able to charge a lot for their chips. They got 73% gross margins on their chips. And indeed, their operating margins are 63%. This company did $32 billion in earnings in the quarter. Just incredible. Now, I said data center is most of it, and it certainly is. It's about 90% of their revenues. They break down data center into two components. Data center compute, which is the sale of chips, basically, and the systems that those chips are plugged into, and networking, data center networking, which it was 14% of revenues in the quarter. Gaming was 8%. There was some other stuff beyond that, but data center compute is still cranking, doing really, really well. There were concerns going into this whether or not there might have been a slowdown. We hear this about once a year. Maybe there's a slowdown in data center build out. Maybe there's difficulties in getting power. All those things are true. And yet 56% increase in the sale of their Blackwell Ultra, their Grace Blackwell, I should say, their Vera Rubin that they're starting to develop going forward here, announcing some big deals with Anthropic. OpenAI is deploying, they said, 10 gigawatts worth of these systems. Yeah, I guess we're counting semiconductors and how much energy they use and how many semiconductors there are, but whatever. I talked about partnerships with Google Cloud and Microsoft and Oracle and XAI, all about building out AI data center infrastructure as well as AI supercomputers, again, based on Blackwell and the sales of Blackwell. But what really jumped at me was this networking business. It had 162% year-over-year growth in networking. And that's the stuff, there's Spectrum X Ethernet being used by Meta and Microsoft and Oracle for AI data centers. Their InfiniBand, which connects data centers or within the data center, as well as InfiniBand switches and NICs. Those are the little components that sit in the front of a server box that has a compute system using NVIDIA chips. And the networking software itself. At $8 billion in a quarter, that makes NVIDIA the largest networking company in the world, bigger than Cisco, bigger than Ciena, bigger than Nokia. Incredible that they've grown this business just for wiring compute within the data center together. That they sold $8 billion worth of that in the quarter. Gaming also was in the doldrums, picked up again, up 30% on a year-over-year basis, over $4 billion. Those gaming chips used next to CPUs at the desktop. Their GeForce RTX isn't just for gamers, it's also for professional visualization stuff, and that going really well with the DGX Spark product, sort of the world's smallest supercomputer, they call it. But again, the breakaway growth of the data center compute or data center networking business at 162%, just really, really impressive here. So how did the stock react? I think it was a big sigh of relief. These numbers were good, and the guidance was even greater. The guidance suggesting 85% year-over-year growth in the next quarter. So the stock market liked these numbers. It rallied really quickly, sold off a little bit during the conference call, but again, up 4% in after-hours trading. Stock up 27% in the year. Compare that to 12% for the S&P 500. Really, this is the leader of the market. Now, the data center business just won't stop. It's completely transformed what NVIDIA was even 2 or 3 years ago when data center was less than half of revenues. Now it's upwards of 90% and the greatest revenues any company's ever seen. And that's all about Blackwell Ultra. We were looking only a few quarters ago to see if any Blackwell was shipping. Now it's their leading architecture across all customer categories, they said. And they're still selling their Hopper units, but Blackwell's still the biggest thing. And the sale of Hopper is important because it means that there is a longer useful life of these chips. It's been an open question in the market, highlighted by a noted short seller, Michael Burry. talking about the depreciation schedules, suggesting these things aren't going to be useful in 4 or 5 years. If they're still selling a 4-year-old Hopper chip, I guess the old chips are useful. That's good news for increased depreciation schedules, which lowers the quarter by quarter, year by year costs for the customers like Meta and Amazon and Oracle and beyond that are using these NVIDIA chips. And NVIDIA talked a lot at the conference call about all their partners, both in their supply chain and their end customers, and how closely they are working with those customers. Here's CEO Jensen Huang.
We've established a whole lot of partners, and so we have a lot of routes to market, and very importantly, our architecture has to deliver the best value to the customers that we have. And so at this point, I'm very confident that NVIDIA's architecture is the best performance per TCO. It is the best performance per watt, and therefore for any amount of energy that is delivered, our architecture will drive the most revenues. And I think the increasing rate of our success, I think that we're more successful this year at this point than we were last year at this point. The number of customers coming to us and the number of platforms coming to us after they've explored others is increasing, not decreasing. And so I think I think all of that is just, all the things that I've been telling you over the years are really coming true and or becoming evident.
The notion that the business is so much different than it was even a year ago seems ridiculous, except the numbers are so much bigger than they were a year ago. So maybe we got to take Jensen Huang at his word. But what's it all mean? What's your big drill on earnings takeaway? What's the one number that tells you a whole lot? Well, first, please subscribe to this channel. Pound that button that says subscribe or follow or whatever platform you're on, whether it's iTunes or Spotify or YouTube. We appreciate your following us and listening to these full video reports and audio reports, but we need to know you're out there so we can keep bringing this to you. So please just take a second and subscribe. It would mean a lot. But first, or last, I should say, your NVIDIA drill down earnings takeaway. Q3 numbers from NVIDIA, really strong numbers, 62% year-over-year growth, holding those growth rates well above 50%. The biggest numbers any company has ever done, $57 billion in revenues, $32 billion in profits, gross margins fantastic, operating margins fantastic. And the thing that really jumped out at me was the networking business. The drill down earnings bite, the one number that tells you a whole lot, is 162%. Because the networking business grew at 162% on a year-over-year basis at over $8 billion in the quarter. It's the largest networking business in the world, bigger than Cisco. Incredible stuff from NVIDIA. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. Check me out at Cory TV and X. And of course, all of our Epistrophy Capital Research video reports on TikTok, summaries on TikTok and Instagram at Drill Down Pod. Of course, the full reports on YouTube at Drill Down Pod.